Joining us now is Karl Eggerss.
Let's get to Karl Eggerss.
Karl Eggerss.
Let's head back out to Chicago and the CME Group and check back in with Karl Eggerss.
Welcome back to Squawk Box. Let's welcome back Karl Eggerss.
Let's head out next to Chicago, CME Group, and check back in with Karl Eggerss, who was with us earlier.
Rick Santelli is joining us along with Karl Eggerss.
Good morning, Karl, once again.
Good morning.
Great to see you again. I know you're standing there in the S&P pit. What's the action like?
Loud. No, I just think the leadership's starting to kind of pull back a little bit, and if you notice, the consumer staples have been leading the way the last few weeks, and it's not to say that large caps or mega caps can't lead the way, but it tells me that people are kind of shifting on the risk scale, and they want to get out of some of the things that have led the rally as the economy may be waning here, and actually go back into things that do have international presence, you know, not as much debt and so forth, and that's why they're looking at Cokes and Walmarts and things like that. So I think that's a concern for the market. I just don't see investors taking that type of risk that they took even a month ago. So I'm basically following the trend and lightening up a lot.
Joining us now is Karl Eggerss. Let's start with this Lowe's here.
Yeah, well, look, the bottom line is this is a company tied to the economy, but not only tied to the economy, they're tied to the U.S. economy. And even though we're going through this recovery that I think is going to last several more months and is still not fully priced in stocks, giving stocks, higher value over the next several months, I think that I think investors need to be focusing on companies that have this international exposure, and Lowe's doesn't have that. So not only they're tied to housing, but they're tied strictly to the U.S. economy. So I'd still be avoiding Lowe's and looking for companies that are benefiting from a cyclical upturn in the economy, but have international growth with it.
That's a great point. I haven't heard that one before.
You got the repayment of TARP, more financial regulation, health care reform, higher taxes coming next year. Nothing to talk about.
That's it? That's all we have? So you have two stories. The fundamental side's continuing to get better, and I don't think that's fully priced in. And yet, technically, you have less and less stocks participating, and things looking like they're starting to roll over, and people should take caution in the short run. But I think that gap between what's really happening and where stocks are, and eventually maybe as we pull back a little bit, that gap is where we're going to be able to make some money over the next few months. So I still think ultimately over the next few months we go higher, but in the short run we definitely got to be a little cautious.
Well said, sir. Thank you very much.
You know, I mean, the whole bottom line is, Martin, investors need to allocate their capital. I'm an asset allocator. Right now I want to allocate my capital to things that are scarce, and I want to get away from things that can be made more available. Right now that means getting away from U.S. dollars and getting into things like natural gas, tin, copper, all those types of things. So, you know, that's really the bottom line for every single person out there. Where do I allocate my resources? And I think you want to allocate them to areas that are scarce.
Let's head out next to Chicago, CME Group, and check back in with Karl Eggerss, who was with us earlier.
I would treat this market kind of like the bully in school that walked by all the time, and he would flinch, and you would take cover, and the one time you didn't, you get punched in the face. Treat it like he's the bull, the market's the bully, and when it flinches, meaning it goes down a little bit and looks like it's going to roll over, you start selling a little bit, and you take a little bit of profits, you take some off the table, because one of these times it is going to pull back a little further than people think.
Karl, you agree some of this lift is on durable goods? Because we did see a big revision to last month, but, you know, signs of hope.
Yeah, I do think it wants to go higher. I mean, we're at one of these technical levels. We're at kind of the top end of where we've sold off before. And if it doesn't do that and it actually keeps going up, that's going to be very bullish. I thought it was very interesting yesterday how politicians were on TV. The stock market rallied. They went off television, and the stock market actually sold off. When's the last time you saw that? So that's encouraging in and of itself.
Yeah, that is encouraging.